Alright, welcome back to the channel. Today we're going to look into the Home Depot, which is a hardware store based in North America. In Australia, we have something very similar called Bunnings Warehouse, and they basically sell, all the tools, products, and services needed to renovate your own home. But surprisingly, the good thing about this company is it's a very strong dividend investing company that has, lots of growth potential and consistently growing their dividend over time. So we're going to have a bit of a deep dive into this company now. But here we are in Seeking Alpha. So it's got a decent forward dividend yield of 2.88%, and then the payout annually is $8.36. Now this is the big one here. So the 5-year compound annual growth rate of 16.06%. This is actually higher than Snap-on and SCHD and JEPI as well. So this is why a lot of dividend investors are speaking about Home Depot, of late. So that's something really to look out for, that very high percentage growth rate there. And they've been growing that dividend for 13 years there. So they're currently paying $2.09 per share, all right, and they pay that quarterly. Right, so moving on to the dividend history. So you can see down here, they've been paying a consistent dividend for 21 years. But for the most recent 13 years, they've been growing that dividend every single year for like a ridiculous amount, which is really good for the dividend investor. So let's have a look back, in the 10-year period. You can see, every single year they've held, a nice consistent dividend there. And then every single year, they're just increasing that without fail. And this is like, a picture perfect sort of way of, how a company should really increase their dividend. You've got that nice sort of linear progression over time, which is very rare to come by these days with dividend companies. And as you can see there, for the most recent sort of quarter, they've upped it yet again. Right, so really good there for Home Depot. Okay, now moving on to the dividend growth. All right, so let's have a look back at this 10-year period. Now this is on a yearly basis here. So back in 2013, they paid an annual dividend of $1.56. And then fast forward to 2016 or 2017, they've doubled their dividend. And then, moving all the way to 2022, they've now doubled their dividend yet again. So really good growth there. And then looking into the specific years of how much they've actually grown their dividend. So, in 2017, they grew it by just under 29%, which is huge. All right, and then 2019, 32%, massive. And then even, the most recent year, 2022, by 15%, which is absolutely huge. And, you compare that with the financials over here at Macro Trends, looking at the revenues, and you can see it consistently growing over time. Like if we were to look at the graph here, you can see that nice linear progression with the revenue, right? Same with the gross profit, operating income, right? Very good numbers there. And then if you were to look at the earnings per share, very, very linear progression. Now looking over to the balance sheet, all right, let's have a look at their cash on hand. All right, so massive spike in 2021. And then for the most recent years, it's sort of just gone, back to a medium sort of area there. But total assets are, they're constantly increasing their assets, especially in 2021. They've had a massive spike in the amount of assets that they're now owning. But therefore, with liabilities, that also goes up as well in order to, get those assets. Right, moving over to Stake, where we can see how much they're trading. So the stock price is currently sitting at $290. From 2020 to 2021, we've seen that massive sort of jump, and then had a high of $415. And then for some reason, like the stock price has fallen quite dramatically. This could be because of interest rates rising and all the terrible news happening within the market. I'm not exactly too sure why it's sort of trading as low as it is. Because we've just had a quick look into the financials of the company. They're all looking extremely good. You look at the dividend growth down here, and it's just insane growth compared to any other sort of dividend company, and yet they're still trading a little bit lower. So this is probably like a really good time to buy at a little bit of a cheaper price, with the dividend yield being slightly higher. So if you were to buy now, you could probably lock in a higher dividend yield right there. So this is a company that I'm very seriously considering buying into at the current price that it stands at the moment. And when you look at the financials and the dividend growth, it's almost very hard to say no. Same as Snap-on, the tool company, as well as SCHD. They're the three companies that actually have, a compound annual growth rate more than 14%. And you think about other companies such as like Coca-Cola and McDonald's, the growth rate isn't as high. So it's definitely a company to think about. But let me know in the comments below, what you think of Home Depot. Is it worth a buy? Are you guys buying into it? Etc. etc. So if you did like the video, make sure you thumbs up and subscribe to the channel. It really helps out. And I'll catch us next time.